Hello and a very warm welcome to the CNBC TV 18 special. I'm Priya Sheth and I'm joining you from Shoppers Stop's flagship store here in Malad. Joining me for this very special conversation is Shoppers Stop's new MD and CEO Rajiv Suri, who has just taken over from long-timer Govind Srikhande in the latest management rejig. Will FY19 be a milestone year for Shoppers Stop? What levers will Rajiv Suri put in place to ensure more growth for the company? Let's find out. Thank you so much for joining us today and congratulations on your new role.
Thank you.
You've joined in at a time when it's been tough for the industry as well as for Shoppers Stop. Revenue has been challenging. It's been a muted year in terms of revenue growth. In fact, revenues last quarter declined by about 7%. So when are we seeing growth coming back then?
So last year, on an overall basis, we were about 3% up like for like. The year had been more difficult due to GST implementation, the after effects of the demonetization. So there has been a lot of, let's call it, turbulence in the consumer minds, which has impacted the sales. But we believe that in the coming year, we would be much better poised to get to a higher growth. We are looking at 7.5% of same-store sales. I also think that the first quarter, in spite of this, is going to be a difficult one. Last year, the first quarter of the year was really, really strong. To give you an example, June, due to the GST impact, a lot of sales got preponed. We had a end-of-season sale. It was like 39% up last year. The last 10 days was actually 67% up like for like. So I think our quarter one is going to be a bit muted, but I think that's going to be an industry trend because it's on a very high base. But I think from quarter two onwards, we should come back strongly.
When can we expect you hitting a double-digit kind of revenue growth? Is there a target that you have in mind, maybe by FY20? Do you think that's when growth will really recover?
So I think that for now, what we are doing is we are aiming for a double-digit total growth, not like-for-like growth. So we continue to expand. We continue to open new stores, as well as our focus on beauty. We're opening more stores in beauty. So I think with the combination of new stores, annualized stores, and same-store sales, we will be in a double-digit mode.
About 3% was the same-store sales growth in the last financial year. This year, you're aiming for 7.5% to 8%. What's going to drive this kind of like-to-like growth?
So we have a strategy around 4 or 5 pillars. Our first, in terms of purely the business pillar, is to refocus on our private brands. Our private brands business has not done well in the last sort of 12 to 18 months, and what we have decided to do is put an extra focus on private brands. We have a strategy that we want to grow this business in the next sort of 3 years to maybe double its size. But in order to get there, we need to invest first in the resources. Private brands, even though will drive the momentum in terms of more share and more margins, we still believe that if you don't do it properly, it can be a double-edged sword.
One key factor that the street has been watching out for is margin growth. And if you could give us a sense as to how much will margins really improve for Shoppers Stop going forward, specifically in FY19 and FY20?
So what we are looking for is 100 basis point in this financial year, because we are putting all the ingredients in place in this financial year. I think the main area which will drive up the margin is going to be the contribution of private brands.
In terms of revenues, about 3,800, 3,900 crores was the kind of consolidated revenues at the end of FY18. When can we reach the 5,000 crore mark? Is there a timeline that you're working with?
So we are working on a strategy on how to get to a number like that. But I think that we're going to articulate that probably around September or October, because we want to work through that as I've just taken over last week. We want to continue our drive in how we have been growing, and we want to focus on 3 or 4 other things. So for example, to get to the top line, you can race to the top line, but we also want to be sure we are profitable. So for us, I want to have a combination of a growth in the vertical ratio. So we are currently at, I think, around 6% we would like to improve that while we increase the top line. So we don't want to go after top line without improved profitability.
Talking specifically about profitability, last quarter we saw we break into a profit. The previous quarters we had seen some sort of loss coming about. How is this trajectory going to shape up going forward in this financial year?
So we are aiming for a higher EBITDA percentage than last year. Last year we ended at under 6%, and I think this year we are aiming at sort of 6.3. So I think in that sense we are going to get better in our profitability. And I think each year while we are trying to grow the top line, we also have to grow the vertical ratios. And then I think you'll start to see a double impact coming. Because if you grew only one of them, we would not make a double impact.
One other key area that Shoppers Stop has been focusing on has been in reducing debt, and there are a couple of initiatives that you all had taken over the last year, including exiting some of the non-core businesses, as well as an Amazon that came and bought some stake in Shoppers Stop. So what does it stand at this point in terms of debt, and will you be debt free by FY19?
So we last year had a debt of about 576 crores. End of the financial year we were at 67, so we wiped out more than 500 crores of debt, and we planned that by end of this year we will be totally debt free, and I think that's a good place to be. And we will also have about 270 crores of shares of Future Group which we got as part of the Hypercity. So I think we will be in a very good position that if we were to have a strategy to accelerate growth, whether it's opening new stores or investing in refurbishing existing stores or investing in the management team, we would have that capital to do so.
So have all the funds flown in terms of all the divestments that you all have done?
So all the funds have flown in. We have the shares of Future Group which we got as part of the deal have a lock-in period of 12 months, and that will be over around by the end of this year. So end of this calendar year.
Amazon had picked up about 5% stake in Shoppers Stop at 180 crore rupees, and that was a very interesting deal that the street had been watching. But in terms of the tie-up, how is it shaping up at this point in time? Is the microsite still, having all your brands there?
So we have now, I would say, majority of our brands on the microsite, and by Q2 end we should be able to have 100% of, or 90 odd percent of our brands online. We are starting to see traction there in sales, and what we believe is that our association with Amazon is not just about sales, and we want to try and see how we can widen that relationship. We are currently also starting to open Amazon kiosks in our stores. We've opened 3 of them now, and we started to see traction in sales there, and we have to see how that relationship develops and how we can further maximize our relationship with them.
What kind of incremental revenue do you expect out of this Amazon tie-up? It's been some time since it was announced, but I'm sure you have short to medium-term targets there.
Yeah, so how it really works is that we sort of started our relationship with them sort of towards the end of the last calendar year, and for us it's still very early days. We still have our monthly meetings with them to see how we can improve sales, how we can get better on terms of our checkouts with them. So I would say it's still work in progress. If you look at it really from a business point of view, it's been 4-5 months, and I think that our first objective in these 4-5 months has to be to make sure that we have the full catalog, and then how can we market that catalog. So I think it's still early days. It's hard to predict in the omni-channel world how much would be your sales, especially if you don't have any history in the sales. Now we also have set up within our distribution centers a separate zone for Amazon fulfillment centers.
Are you open to Amazon sort of picking up more stake in Shoppers Stop? Is that something that you would consider when the time is right?
So there has been no discussion either from our side or from their side on this, so I can't comment on something which is conjecture at this time.
But would you be open to it?
When the discussion happens, we'll have to see where we stand and where both parties stand.
So you're open to it, essentially?
I think we would be open to any discussion, but at the moment we can't make any sort of talk about it because there isn't anything on the table.
All right, on that note, let's slip into a very short break. There's lots more on the other side.